Hey guys, Sports House from BK Force. Welcome to our fourth day technicals for 11/15/13. As always, trading foreign exchange margin carries a high level of risk and every suitable for all investors. I ask you to read this disclaimer very carefully to understand all the risks associated with trading and margin, and to seek advice from an independent financial advisor if you have any doubts. Well, a pretty interesting day today in the market. I think first and foremost, we really need to take a look at the yen because it obviously took out the key 100 level, and I think that's really going to be the pivotal trade of the day today. The question is, can we push ourselves higher? Can we push ourselves basically towards the 150 level, because that's the next big resistance level in the trade. The fact that we actually were able to take out the 100, hold it, and close above it is a pretty bullish move, and the fact that we're closing on the highs here suggests that we should have some continuation, at least a probative move, at least into the 130s, 140s in the Asian session. We don't have any data on the set in Asia. We have minimum amount of data in Europe, and we have just very much second tier data in the US. So it's really not going to be very much data driven. It's really going to be all momentum driven. Today's commentary from Janet Yellen really didn't, I think, change the ball game in any way or fashion. But what is interesting, and why I think the yen is kind of such an interesting and unique trade right now, is that despite the fact that Yellen really remains relatively dovish, which you would think would be hurtful for dollar yen, what is actually happening is that because of her dovishness, it's actually positive for equities, and that is trumping the fact that it's maybe depressing U.S. yields for the near term. So in this case, the fact that equities across the world continue to set record highs, and we'll see how the Nikkei trades today. If Nikkei has a strong opening trade, it certainly should be a positive lift to the dollar yen. That is really what's driving and trading the correlation at this point. It is something sort of the exact opposite of what we used to trade on, and that's why it's very important to watch the markets on a day-to-day basis, because they really change their correlations all the time. So for now, it's really much more of a correlation between equity market flow and dollar yen, and as long as that remains positive, there's a chance for dollar yen to go higher. So as we open up Asia here, this is where the critical look is going to be today as far as the trade goes. Of course, that's going to translate also in the overspill on the yen crosses, and of course you see the yen crosses here with pound yen taking out fresh yearly highs here above the 160s. Euro yen is very, very close to the key 135 level. Where's my euro yen? I'm going to be watching that very carefully, because it looks like it wants to really pull itself up towards that 135. The 135, of course, is a big resistance level in euro yen. We'll see if it will be able to clear it, but I think the fact that it wants to test it somewhere around there is quite probable. So yen driving higher is going to try and pull all the yen crosses across the board. That's why it's worth watching here on all the trades. Euro had a relatively okay day, but it's still getting very frustrated at this 35 level. We came in, I think, within 4 or 5 points of 35 today. The really big question is going to be if they can push it or pull it through this key resistance level. I don't think there's too much optionality, or at least none that I know of at this point, but I'm sure there's probably some defense here. And the fact that this was former support, now resistance, is certainly weighing on the euro. So for euro to maintain its bullish tone, you really need to take out the 35 and ideally really close above 35 to kind of recapture and erase all of this post-Draghi dip. We'll have to see how it's trading out. It made a couple of forays into it and just got sold very hard around that level. Similarly, the same story was in the pound, where the pound made a couple of forays into the 61 level today and got sold very, very hard. So from the high beta point of view, we are clearly at these very, very key resistance levels, and we're going to need a little bit more of a risk appetite push to pull us above those levels. But if they get pulled along with a relatively buoyant yen, you really have a very combustible upward thrust in the yen crosses here, as that could be the trade of the day as we go into the session. And then last, certainly not least, Aussie. Just really actually wallowing. I think Aussie, in many ways, of course, been the weakest link in the chain and continues to be so. We bounced, had a half-hearted bounce to sort of 93.50 or 93.40 or so, came right back down. The only thing that I think is relatively positive if you're an Aussie bull is the fact that we haven't made any downside progress. The fact that we had 3 straight days where we really haven't broken below this 92.70 level or 92.80 level suggests that as long as we can maintain that lows, as long as we're staying around these lows, we could be building a base for a potential turn. So the Aussie to me is actually a buy with a stop right below these lows or a sell through these lows, because that would tell us there's potentially a breakdown to the downside. And that's pretty much how it shapes up into the final day of the week. As I said, yen crosses, yen itself going to be probably the main story of the trade as we go into Friday. Wishing you guys the best of luck and the best of trading. Boris Schlossberg over now.